There's nothing better than the smell of coffee in the morning if you're a coffee drinker. Maybe you like to get coffee every morning at your favorite coffee shop like Starbucks on your way to work and feel energized for the day. Trust me, I've been there and it feels good to do that. In this video, I want to show you how much money you'll save if you stop buying coffee every morning for the next 30 years. I know that's a really long time, but at the same time, I think you'll be really surprised to see how much money you'll have if you actually follow through. Here's a spoiler alert. It's so much money that it could even be your retirement. And before we go any further, if you can please hit that like button and subscribe, it will help me out tremendously with my new channel. Now let's assume that your daily coffee costs you $7 a day. That $7 is calculated by adding the price of an average cup of coffee at $5, a pastry item maybe once a week, plus tax. Not an unreasonable cost, and I know many people spend a lot more. If you're adding some sort of special milk like soy or almond milk, the price of that $5 a cup quickly goes up to $6 or $7, and you'll end up paying around $8 after tax. This person on Reddit reported a year ago that his or her pumpkin spice latte with soy milk was nearly $8 after tax. So I think $7 a day is a reasonable estimate. That brings your monthly coffee spending at $210 per month and $2,520 per year. Now you might be saying, hey, come on, $2,500 a year? That's not really that much money, and after all, I deserve it because I work hard. But what I'm about to show you might shock you, so you might want to consider this before you continue on with your daily coffee purchases. For the purpose of today's video, we're going to assume that this $7 coffee cost will stay constant for the next 30 years. And of course, in real life, that coffee prices will increase, and say if that daily cost jumps up to $10 a day, that will be reflected in the increased amount of monthly saving, and thus your final number will be adjusted upward for the inflation. But we won't get into all that for this video. So let's just use that $7 figure and look at the final number in present value of today's money. First, let's see if you did nothing with that money for 30 years and you just put it in your checking account. Now, everybody can do the math or use a calculator. So $2,520 a year for 30 years is $75,600 after 30 years. So that $75,600 is the total amount of your contribution during the 30 years, and it will grow by nothing, zero, if you just put it in your checking account. Now let's say you've been putting all your money during the 30-year period in a high-yield savings account, and although there's been a high fluctuation of what that savings rate has been in the last 50 years, let's just say they are 3% a year. At the time of this video, the APR for money market savings account are usually much higher, ranging from 4.5% to 5.5%, but rates are expected to come down at some point in 2024. As you take a look at this compound interest calculator, at the end of the 30-year period, your total account value will be at $122,375. With this number, you might still not think giving up buying coffee every day is worth the sacrifice. Now, let's look at the scenario where you put your monthly savings from the coffee money into S&P 500 index fund every month for the next 30 years. According to Investopedia, the S&P 500 index, since its inception in 1957, its historic annualized average return through 2022 is at 10.13%. And as you look at this chart, there were a few occasions during the past recessions where it lost 20% or more of its value, but every time it sprung right back up, and as you see, majority of the years its return was positive. And 30% plus annual return is not uncommon with the S&P 500. But for the purpose of this video, we're going to use 10% as the annualized return for calculating your coffee money investment into an S&P 500 index fund every month, recession or no recession. Now, let's use a compound interest calculator to see what the return looks like in the future. Although the stock market does not provide compound interest per se, its compounding effects in stock valuation, which increases over time, will achieve the same result at the end. And it's just a different process of how it gets there. As you see on this compound interest calculator, when we use a 10% annual return on this, your monthly contribution of $210 into an S&P 500 index fund will turn into $474,702 in 30 years. That's actually a lot of money. I mean, you might just be able to retire with this money combined with your Social Security income. And remember, this value is inflation adjusted, as we talked about the $7 a cup being constant for this video, but you'll actually contribute whatever the cost of the actual coffee is in the future. Well, but still, how can your total contribution amount of just $75,600 for the entire 30 years turn into a nearly $500,000? That's crazy, isn't it? See, that is the power of compounding, which is the very foundation of long-term investing and getting rich. Yes, the money does grow on a tree. The money that your money makes also makes money, and that will then make its own money while your initial money still keeps making more. Basically ballooning its size at every compounding event. That is how you become rich. It doesn't take doctors, lawyers, even though I am one, or a very successful business venture to become rich. It just takes ordinary folks some discipline and consistency. What's really surprising to me is that most people don't even think about this concept of investing and compound interest and just live their daily life without any financial goals. I know for a fact that everybody thinks about wanting to make more money at a current job or get a different job that pays more money, but not many people get excited about or even think about how much their monthly savings will grow in the future. I'm going to show you a shocking number. Look at the median 401k balance by age in the United States. The median 401k balance for 65 years and older is only at $70,620. That is an alarmingly low number. That tells me that most people don't think about retirement until it's too late. And you and I both know that we can't survive on the Social Security income alone during our retirement. If you thought that $500,000 after 30 years was pretty impressive, watch how much more you can make if you have been putting your money away in a certain retirement account. First, let's talk about the Roth IRA account. This is a post-tax individual retirement account that anybody can open with most financial institutions like Schwab or Fidelity. The beauty of the Roth IRA is that everything you make within that account is tax-free. So if you have contributed that monthly coffee money of $210 into a Roth IRA, your $500,000 after 30 years will be completely tax-free. So your gain of nearly $400,000, which is the account balance after 30 years minus your contribution amount, is completely tax-free when you're ready to withdraw after you turn 59 and a half years old. Anyone is eligible to open and put money into a Roth IRA as long as you're making under the annual income limit, which is $161,000 of modified adjusted gross income for single tax filers and $240,000 for those married and filing jointly. Given that the national median household income in the US is around $74,000, Roth IRA should be an option for most people. Now, if you have contributed that monthly coffee money of $210 before paying any taxes on it into a pre-tax retirement account such as 401k or a traditional IRA, it will actually feel more like you've been putting away only about $150 per month because you're using that money before you pay like 30% of tax on it. So if that's what you're doing, you might even consider putting more money away every month before you pay any taxes in a pre-tax retirement account. If you have an employer that matches your contribution in your 401k, your $500,000 could even double, and you could retire with nearly a whole $1 million after 30 years. While I'm saying this, I'm really hoping that if you already have an employer that matches your 401k contribution every month, I really hope you're already on that horse. Many employers with a 401k matching benefit contribute up to 4 or 5% of your contribution. So assuming it's 5%, if you're making $70,000 a year, you only contribute $3,500 pre-tax and you'll end up with $7,000 per year. So if you put all that money into an S&P 500 index fund, you're actually putting 2.7 times more money away than our estimated coffee money of $2,520 a year. And outside of your employer matching, you can still max out your 401k and contribute up to $23,000 per year in the year of 2024. So depending on how much money you're disciplined enough to consistently save, you can easily become a millionaire by the time you retire. Even though this video used buying coffee every day as an example of an area in your life where you can save money and invest, it could be any other discretionary spending that you do out of habits. As you see, just $7 a day can make you a lot of money in 30 years thanks to the compounding effects of investing. So I challenge you to up that bet to $15 a day if you want to become a millionaire when you retire. Just don't forget, if you never invest, you'll never become rich. So getting on this investing journey as early as possible is really important. Well, that's it for today's video. I hope you found this useful. If you like this content, please hit that like button below and subscribe. It'll help me out tremendously with my new channel. Thanks for watching.